Hello everyone, welcome to today's US Open live webinar. It is Tuesday, March 7th, 14:20 GMT, 10 minutes before Wall Street opens. This is your host, Nikos Zabouras, Senior Market Specialist at FXCM. Markets brace for today's Congress testimony by Fed Chair Powell, which is expected at the top of the hour. Oftentimes, the prepared remarks are released ahead of that, so we could potentially get the prepared remarks during our session today. Other than that, the Reserve Bank of Australia provided a dovish hike today. We continue to get hawkish commentary from the ECB, while China data and news and Sino-Western relations remain in the spotlight this week as well. So before we begin talking about these themes, as always, please read carefully through the disclaimers and the risk warnings, and then we will get started. Okay, let's go ahead and get started. We look here at Euro USD. Just a few broader comments before we go into more detail about it. We already said that we had the Reserve Bank of Australia earlier today. We'll talk about it a bit later as we comment on the Aussie as well, on the technical outlook, that is. Other than that, China remains in the spotlight. Over the weekend, the government there set target growth of around 5% for GDP for 2022, for 2023. This is lower than last year's goal, higher than the actual 3% achieved last year. It also bumped up its defense spending to 7.2%. I have spoken in the past and in our 2023 outlook along with my colleague Russell Sor about how China may actually not focus on economic growth above anything else this year and shift its focus towards security, economic or defense security and other factors. And I think these two developments point towards this support, actually, this view. Now, let's move over to Euro USD and let's discuss the policy outlook here. For one thing, we have the European Central Bank, which has been absolutely hawkish. We get a series of aggressive commentary by officials. In the most recent ones this week, the influential member of the board, Mr. Lane, talked that underlying inflation suggests that it will be appropriate to increase rates further beyond the March meeting. We remind you that the ECB has already communicated its intent to hike rates by 50 basis points in the upcoming meeting this week. Now, Mr. Lane says, in line with other commentary that we have seen, that it will likely be appropriate to have more rates beyond that, while Mr. Holzmann, the Austrian central banker, talked about rates peaking next year, which is one of the most aggressive commentary we have seen. Now, on the other hand, all of these, of course, are supportive of the common currency. But on the other hand, we also have heightened expectations around the Fed as well. We have talked about the repricing after last month's blowout jobs report, and a string of data points after that that support this higher for longer narrative of the Fed. Now, looking at CME's Fed Watch tool, this assigns the highest probability currently at rates peaking at 5.5%, but it's close with an even higher terminal rate of 5.75%. So we're looking at, based on these projections, we're looking at another 75 or even 100 basis points worth of hikes. And of course, focus now turns to Mr. Powell, who is expected to speak at the top of the hour. So now on the technical outlook, these competing forces have Euro-USD stuck within the cloud, the daily Ichimoku cloud, as you can see here. Now, given that the common currency is capped by the 200 period EMA, we feel there is higher risk of breaching the lower border at around 1.057, 1.058, that region over there, which would expose it to the critical confluence of support in the broader 1.045, 1.039. However, we struggle to see it much lower than that. We believe that this region can support it technically and fundamentally. Of course, everything we talk about is tentative, as we expect Chair Powell, as we said at the top of the hour, and a series of key economic data as we go towards the Fed's policy decision later in the month. Now, on the other hand, Euro-USD comes from a good week and has not lost the ability to push towards the upper border of the daily Ichimoku, which would be around this region here at around 1.078, but does not inspire confidence for a bigger advance towards 1.093. So that's it for Euro-USD. Again, big week. We have many things that could increase volatility and also determine the trajectory of the pair, and not only this pair, but other Forex pairs and asset classes as well. Let's move over to the Aussie, the Australian dollar versus the US dollar. As we said already, the day started with the latest policy decision by the Reserve Bank of Australia. It raised rates by another 25 basis points, but struck a softer tone compared to the hawkish rhetoric of the previous meeting. It offered a tame outlook, expecting that further tightening, and I quote here, further tightening of monetary policy will be needed, which sort of implies that even just one more rate hike could be enough before pausing. We're going to have to see how this plays out, but this wording definitely opens the door to such a scenario, and it's a clear dovish shift compared to the previous further increases, plural increases reference. Of course, it's also quite clear that policymakers have not decided what they will do from the rhetoric and from what we have seen in general commentary and moves recently. But in any case, that was a dovish shift in rhetoric despite the rate hike. Now, as a result, the pair drops more than 1% today. And again, the policy differential here is clearly in favor of the greenback. It's now exposed to the 0.6574 support, but it's probably gonna need another catalyst to break below this level. Now the move looks a bit overextended, and perhaps it could find some support from a technical perspective. Again, their Chair Powell's speech could change all of that. From a clearly technical standpoint, this region around here could potentially offer some support. A disappointment from Chair Powell could help it rebound again, but the upside has many roadblocks. The first resistance comes at 0.6784, but we struggle to see how it can surpass the region here, starting with the 200-period EMA, given the policy rate differential. And now let's switch gears and go to Wall Street. We're already 1 minute into the session. I'm also looking to see if there was any release of the prepared remarks by Chair Powell. I don't see any such thing so far. Okay, so the theme here is again the Fed. And as markets grapple with, now actually last week it was a good week for the Nasdaq and Wall Street in general. Some economic data were a bit soft, so this perhaps in this bad news is good news reaction helped the stock market, but despite the resilience, the higher for longer prospects work against it. We already talked about the terminal rate projections. Now, bulls are in control here and have not lost the ability to look to this year's highs at 12,900 to 13,000 region, but we would be cautious here given these heightened expectations around the Fed for any moves above that. But once again, this is from a technical perspective. We've got to see what Chair Powell will say today and other events later in the week and the upcoming ones as well. Now, despite the resiliency, there is risk for for moves below the 12K mark and lower lows, but a strong catalyst could be needed for sustained decline below the broader 11,500 region. So that's it from the technical outlook. Let's round things off with what we expect and talk a little bit more about what we expect from Fed Chair Powell. So in line with other official, Mr. Powell has been quite hawkish, but has also been quite relaxed at the same time and not forceful. He also has talked a lot about disinflation, a process that has already started, as he has repeatedly said. But we recently saw a reacceleration in PCE inflation. So it will be interesting to see if after that he sort of tones down this rhetoric. There is definitely, given this acceleration in inflation, there are definitely grounds for him to appear more hawkish. But on the other hand, he may also opt for a more reserved approach, again, given the fact that we expect NFPs at the end of this week, CPI inflation update next week, and of course, then we're going to have, after that, the actual decision along with the updated projections by the ECB. So we will be looking to see for any hints around the policy path, but he may opt to stay on the sidelines around this and not offer anything new. We're gonna know soon enough. The hearing is expected at the top of the hour, and then of course another hearing tomorrow. Now, on Wednesday, we expect the Bank of Canada. In the last meeting, back in January, official had raised rates by 25 basis points to 4.5% and had signaled a hold. So now we wait to see if the BOC will become the first major central bank to pause its tightening cycle. Baseline expectations, as we see them in the economic calendars, point to this hold, and the truth is that there's probably not something compelling to change that. But again, we will wait and see. Now, there are a few other data points until our next session on Thursday, such as Euro Q4 GDP, GDP figures from Japan as well, in producer inflation, consumer inflation from China. These all before our next session on Thursday. And of course, we have events beyond that, most notably the jobs report, the US jobs report on Friday. But we will talk about that on our next session on Thursday. That's it for today. Thank you for joining me.